It's John, your stay at home designer. Interesting week. We're looking pretty good as far as the positions are concerned. Still somehow sitting on a pretty good win rate, which, like I was telling you on the last video, I'm still suspect of, and I don't expect in the future. But let's look at a trade I made this week, and it was a quick turnaround. So, on last video, I talked about opening a CRM trade, and this is Salesforce. Now they have earnings that had came out. So it I entered the trade knowing earnings was on its way. And actually, when I am encountering something like that, I also take the risk into account significantly. So, generally speaking, I try and trade at a certain delta. And then, based on that, I also want to collect a really high amount of credit versus the amount of risk that's being taken. So, in this case, it worked out really well. Um, Salesforce, if you didn't see, had just crushed their estimates. I think they were up like 115% versus the estimates, which was, impressive in a way. But I will tell you, there's been a lot of financial fidgeting from a lot of companies. Like they basically lower their estimates significantly, and then you're basically bound to beat everything is kind of where the market's been the last few months, and that's fine. It's understandable that we'd experience repricing and different ways to mess with everything. But with CRM, excuse me, and traded the 10-2 expiration, we entered at the 192 and a half and 190 strikes, and we're only 2 days in this trade, and profit came real quick. And like I was saying, I've basically started trying to play with between 1 and 5 days in trades, and essentially if I can hit between 20 and 30%, I'm really happy, and that'll allow me to open up new trades and go from there. Now, this was a momentum trade, and it did work out great. Earnings was awesome, and they did get included into the Dow. It actually replaced ExxonMobil, which has been in the Dow for, gosh, almost a century, I think. And that's a big move. I mean, there's a lot of reasons. I guess with Apple splitting and the Dow's more price weighted rather than market cap weighted, this allows them to want to be looking for higher priced uh, stocks to add to their index. And this is one reason, but it also does help get with the times. CRM has been a part of a lot of businesses, especially some older companies that I used to work at. Salesforce was a big part of that too. So I'm okay with it. It seems to work. Let's move on to the next trades here. Now, a big thing for today is Jay Powell's. Jerome Powell is doing an announcement today for the Fed. It has to do related to inflation targeting and everything like this. Now, I I read a little bit of it. I didn't see the announcement or catch anything. I just saw a couple headlines. It does look incredibly, almost more extreme than we are now in terms of, they're going to basically target inflation at an average. So, if you're just going quarter by quarter and your measurements come in like inflation's high, well, they're going to say, okay, well, over the average 6 months or a year, it's technically low. So keep printing or keep propping up the market, and that is good in some ways. But I do think we're gonna start heading more towards like moral hazard areas, and I know this is very subjective. A lot of people have different opinions. I'm I'm not a long-term fan of the solutions we have, but I am okay with it in the short term. So let's just see where it goes from there. Show you some charts. Actually, let's check out CRM really quick. And you can just see just shot to the moon basically. My entry was on 8/24, and so that was here. And basically playing momentum. The good and bad is I knew earnings were coming up, I had no idea this was going to happen, so don't pretend like I'm a guru or anything like that. But I'll take it to get 75% profit in 2 days. That's great. And Salesforce, long term, maybe they'll be a good company. They've been kind of trading sideways for a while, so it is a good neutral trade, I think, in the long term. Some other stocks, though, I am checking out. Walmart, basically your retailers, your COVID retailers are great. Walmart, Target, Costco. One thing that's kind of propping Walmart up big is supposedly with the TikTok rumors, Walmart and Microsoft are somehow planning on partnering, being part of the deal, something along those lines. So that's a Microsoft's chart. You saw Walmart just pop on this news here, though. That's a pretty big one. And then let's see, Costco I like. Yeah, that's a great chart. Okay, let's check here. Target is another big one too. So I think that went up. Yeah, it did pop a few days ago. Really good, really just insane earnings. I mean, what 338 per share versus 164 estimate. That's pretty wild. So, and I don't see how that doesn't continue, in the near to medium term. So that's pretty good. But yeah, any of those retailers I like. Nvidia is another that I'm okay with. The trend's still up. It's a great momentum play. I'm looking at entries there. Initially, I had risk off this week because of the Fed announcement, just to have a little bit less exposure than normal. But now I'm relatively comfortable with the exposure. I can see here's the Qs. NASDAQ, still an uptrend, but it is having a little weakness today. You would have expected a big move with this announcement. SPY a little lower today, but nothing crazy. Now the Russell 2000's been a sideways range, so there's becoming a divergence here for sure. We'll just have to see how this plays out. I definitely think we're entering kind of the political cycle, and I've tried to gauge a little more of how we're setting up, because we're setting up for volatility for sure. It's just a question of if any volatility really happens before the election or after. Um, if I was to give my opinion, and please just know this is really for educational purposes, this is just my opinion. None of these results are indicative of future results. So, like, do your own research, and I'm always happy to have discussions too. But the way I kind of view this is that I do not see, unless it's a true black swan type of event, I don't really see any general reasons that the market would sink lower um, between now and the election. Basically, you've got everyone here uh, sort of with the goal to prop the market up. You want to make sure the market looks great for the election, et cetera, et cetera. So even if it is a house of cards and things are looking awesome, there's a lot of people invested in the idea of not having any shakeups between now and November. Um, so I'm not a big fan of trying to fight the trend, because if you try and take these massive short positions or sell calls or buy a ton of puts, uh, you're almost leveraging against yourself in a not great way. And there is a chance. I mean, I could be totally wrong on this, but everyone here who's been shorting since March is now really taking a beating, and they probably are either insolvent or have switched their bias now, or they just have less capital than they used to. So, and that's tough because you get hit on the downside, and then you start making bets going down, and this goes against you, so you take a hit on this upside. And so some of those people have probably lost their accounts or have lost a significant percentage. So don't do that. And if we trade sideways to upwards is kind of how I maybe view most of the markets between now and November. And with that said, I'm okay. I'm happy to go a little more risk on now. I have a few momentum and mean reversion trades that I'm going to play with. between now and next week. So look for those videos come out, and definitely appreciate you stopping by. And until next time, my dudes, bye bye.